Welcome to Local Omaha. I'm Ken Bartholomew.
And I'm Kelsey Wiedel.
Local Omaha, we come together. We're a televised podcast. We like to highlight local area businesses, community coordinators, nonprofits, and entrepreneurs. And this week, Kelsey, our guest is...
Today, we are here with Reid Gates. Reid is at Regent Financial. Reid, tell us a little bit about you and what you do.
My name's Reid, as she said, and I'm a loan officer at Regent Financial Group, and I help people kind of get into their homes, find mortgage loans, the best products for them, and kind of strategize and get an idea of how they want to go on in the future and buy their next home, because usually it's such a big decision and happens a lot quicker than everyone thinks it will. So.
Cool.
So, Kelsey, Reid and I met with my being in real estate and Reid being in loans. And so, Reid, one of the questions I wanted to ask you is, with some of the different, with interest rates, where they're at, things like that, what kind of loan products, or what are you seeing the most? Is it first-time buyers, or people moving, or what are you really seeing in your industry as far as some of the loans that you're...
Well, it's definitely a weird time right now with kind of the market and where everything's at. There's not a lot of people that are wanting to move. All these people that had these COVID or interest rates of like these high 2s, low 3s aren't in a super rush. So that means we have this huge buildup of first-time home buyers that need to get out and are trying to afford their first thing. So I do a lot of loans right now for first-time home buyers. There's programs for Nebraskans specifically that kind of help put those people in their homes. One thing I like to do is most people don't know where to start or what monthly payment they can afford or what. So I like to go through and kind of educate people and break it down and show them how much taxes are or insurances or kind of the ins and outs of it. So.
I think that's a great resource that people may not be familiar with and may not know as much about. Is a mortgage officer may be able to help them with something like that. Are you finding that people don't really understand the position or what you can help them with?
Yeah.
What would you like to clarify about what you do for people who have questions?
Oh yeah. Well, most people, like I said, don't know where they go. So a big thing I do is put numbers on paper and kind of show what they can afford. And a lot of people, unfortunately, want to buy a $1 million house and they might work an 18-hour job. And it's like, you can't afford that. Here's why. Here's something you can't afford. And here's what. Right now, especially, there's a lot of people that have like struggle on credit scores because money's a little tighter and stuff. So one thing we do is like repair people's credit to get them in the home, because most people don't know credit scores, or if you ask them about it, they might not know a whole lot, and no one teaches you this stuff in school either. So
Yeah.
That was one of the things I wanted to ask about too, is because that's what I'm seeing is when I meet with individuals, more often than not, it's before they've even had a conversation with someone like you. And a credit score becomes a topic. So if someone has, so let's talk about the different loan types. So FHA, VA, conventional.
Yes.
What am I missing?
Non-QMs.
But essentially those are the ones. Okay. So from a credit score standpoint, who's the most forgiving? Would that be FHA?
Yes, FHA is. And they have a minimum credit score of 580.
Okay.
For most pricing right now, you're going to want to be at least above a 600.
Okay.
In Nebraska, there's a lot of first-time homebuyer programs. Minimum credit score is 640.
So is that like a NIFA program?
Yes, correct. Okay. And that's for homebuyers assistance. Some people don't want to be house poor, where they spend all their money on buying the house and all of a sudden they can't buy a couch or fridge. So it's good to help kind of people save that in-pocket money for all those expenses that are going to be coming up.
Yeah. Well, I think one of the things that's, also with home purchasing and stuff like that, sometimes, take this the right way, the price that you're purchasing the home for is extremely important.
Yes.
Excuse me. But sometimes you can get caught up on that when there might be an opportunity where the best bang for your buck might be a 2-1 buy down, or it might be a maybe the seller provides some type of buyer credit at closing. And those types of dollars can be something that the savings on those can offset just somebody coming down on the house $5,000.
Yes, sir. And I'm sure you can attest to that. We've been seeing people get $5,000 in seller credits that go to their closing costs, and next thing you know, they're getting a house without spending any money at the time of closing, and that's a game changer.
Huge.
Fantastic.
Feels nice, even though you spent $350,000, but at that time it feels like nothing.
But at least if you've got this money that you saved to put down on a house or to put toward that purchase, now you've got it in your hands, and you can do some of those things when you first move in. And
and that can make a huge difference for a first-time home buyer.
Absolutely.
Oh yeah, it's 2 payments, 3 payments. Right
Yeah,
there. So,
exactly. Or, you're just getting started, maybe you've just moved and you need, new furniture, or you need new things for your new job. So I know we've spoken a little bit about some loans, but can you run through, for people who aren't as familiar with the different types of loans that might be available to them, what are the kinds of loans that you work with? And can you go through the difference between those two?
Yes, so there's a conventional loan. Conventional is usually kind of reserved for your prime borrowers. Those are people who have scores above 680 for credit scores, and debt to income limits are a little tighter, so you have to make sure your income ratios are in line and stuff compared to your credit card debts and your
So
house
don't buy a
debts.
new car right before
No
you
new cars. Try to pay down the credit cards. Right now, credit cards they got control of a lot of people. Average credit card debt, I want to say, was around $18,000 to $20,000 per person, and that can get out of control really quick.
Yeah.
One of the main things, though, with conventional is you just want to keep affordability where it is. So conventional is more of those prime bars. FHA has higher debt to income ratio, so sometimes people who have lower credit scores, they have more credit card debt, can fit better in an FHA loan. And then there's the VA loan, which is saved for the veterans, and those usually have the best interest rates and no mortgage insurance and best terms and stuff. So really all sorts of loans. And self-employed borrowers, there's loans for them, there's loans for doctors, there's something for you if you need it. So
wow, interesting. I think that's an overlooked resource for a lot of people. I think that they just don't know that there are so many options out there, maybe. Because before I worked in any sort of real estate, I had no idea how many different things that you could do. So it's nice to have someone to help you navigate that process.
Yes, and it's easy just to throw someone in like a 30-year conventional or FHA loan, but that might not be the best loan. So it's kind of fun to go through and look at what's specifically the best for their scenario.
Wow, so you really have to go an individual case-by-case basis, it sounds like.
Yep, and talk to them and see what they like. And all that.
So someone has a low credit score. They come to you, they have a lower credit score in the 500s, that type thing. And I'm sure there are factors here, but how long will it take someone like that with some suggestions or direction from yourself to improve their situation, to be able to put themselves, I guess, whatever, let's say they improve it up to a 650, 680.
To that amount that we
Then how long do they have to move around at that new rate before it's received positively, with a mortgage?
So we work with CIS, and my experience I've seen is when we do this, usually, like you said, there's factors, but sometimes it's as little as paying off $100 on a credit card that someone might have forgot about, and then that can jump your score up 50 points, which is a complete game changer. For instance, like Capital One, if I did a credit rescore for them, took maybe 10 days after it paid off for the credit score to fix and go up, and then we were pre-approved and writing offers on houses right then. So
do you find that a lot of people may not know on their own before they get to you how to do that? Or do you find that they don't even know what their credit score is, maybe?
Yes. And credit is frustrating, to say at the least, where you can make every payment for the life of every loan you've had. And the moment you miss one, your credit score is going to drop 50 points or 60 points, and you're going to freak out and all that. So most of the times it's just getting it to the level where there's a little nuance where you can get it to where it needs to be. So there's always little things, and it might not be paying $5,000 off on your credit card. It might be paying down to a lower payment or something. So it's kind of nice to see what you need to do before you do it all.
So what's the importance of both the couple themselves both having a good or high credit score? If one is lower, the other one, can one carry the other one, or maybe explain that? Or
so we go off the lowest middle credit score. You have 3 credit scores: TransUnion, Experian, and Equifax. We go off the lowest of the middle score. So you and your wife both have 700s. She has a 698 on one of them, but you're at 750 all the way through. We go off to 698.
Okay.
But that doesn't mean yours don't help her.
Right.
You have all your income going to it. You have your strong credit factors and all that go to and strengthen the file. So like hers, with your high credit scores, even if she had a lower, you could probably go conventional still. So having that household income, especially now when affordability is lower, is really, really, really good. Even I wrote down some stats and stuff here to kind of ramble out at you guys, but like home prices for 2025 increased 2.2%. So if you think about that, that's good for seller point of view if you're going to be selling your house, but also as a buyer, you got to start factoring in it's going to be going up a little bit. So it's kind of a fun scenario we're in. Stressful, fun, anxious, whatever you want to call it, but we're going through it and figuring it out. So
yeah, I know, so you hear the difference between a seller's market and a buyer's market, and we start to see it become leaning more toward a buyer's market now. But I have some people ask me that question, and it's like, well, is this buyer's market? And that can really be dictated from the area of town, a particular residential neighborhood, et cetera, that type of thing. So some of the
prices you're looking at,
right,
all of that. Yeah.
Right. So, but we are definitely seeing that. I mean, where there's more inventory on the market than has been in quite some time. And you're starting to see that period of time that homes are on the market are longer. And there's the seasonality factor to it as well, obviously. But I'm optimistic that next year will be a robust year, and some things will turn around, and hopefully we have some different packages or even incentives for some of those individuals to move out of their homes, or they've got that 3.5%, 4% interest rates. I'm going to be a little bit off on these statistics, but it was like 68% of the people living in their home now have a 4% or better interest rate, and 25% of people own their homes.
Yeah.
So, I mean, there's some pretty strong factors there just to stay put.
Well, and that's what I have a term here written down called the Great Stay, and that's what they've been calling the past 2 years, where people have not been, like, there's no reason for them to go. They have the lowest interest rate. They don't want to go to a high 6 when they have the low
I can
3s.
100% identify with that.
So
I think a lot of people in my age group are at where they are at in where I'm at in my life. We bought this house as our family home, and we got a great interest rate, and now we're in this what you called the Great Stay, where we know we could use a little bit more room, but we aren't willing to give up our interest rate. So if people are looking and they're monitoring interest rates, what is one thing they should look at right now? Should they look at buying a home right now? Should we see what the year does? And what can they do in the meantime? Not to throw a million questions at you. What can they start doing right now that will help them help you get them into a home?
Yeah, so big thing right now is saving the money you can and not taking out any new existing debts. Affordability is down. So it's really important to save any reserves you can with those unexpected costs that are going to come up. One of the main things that kind of you've been saying with rent prices are going up. So it's kind of pushing some of these people out of their rentals. They want to get this equity going and all that.
100%.
So it's slowly, we're slowly to start seeing that come over. What was the second part of your question? Sorry.
That's okay. I threw too many at you. What can they start doing right now is basically what can they do before they meet you that will help them get in the best possible position whenever they're ready to take
when they're ready.
Next step.
Yes.
Yeah.
Yes. So what I kind of tell people to do is try to time it out with everyone's in a lease right now, and it costs money to break a lease. So kind of get an idea of when you're ready to start looking, and start 2 months in advance, 3 months in advance. That way we can look and see, oh, your credit score is low. Here's what we do to get it up. By the time you're ready to get out, your credit score is already up and fixed. And start saving money. By the time we're ready to go, you have your money that you need to spend on the house saved up, plus a little extra, we're ready to go. So really it's a lot of preparation of just starting early. Most people just don't know. So it's just a fact of getting the knowledge. Interest rates, back to your first part of the question, interest rates have been getting cut. We've had 2 cuts so far this year. We're expected another cut beginning of next year. So
Fantastic.
we always say I hate this term, but date the rate, or don't date the rate, marry the house. And you can always refinance. So interest rates, they're going to be going down. And if you see the house you need to go now and move on it now, move on it.
Right.
Don't get too held up on the rate. You can refinance within 3 months.
I think the other thing that's interesting too is how we've become spoiled. The first house that I purchased a few years back was at 12%, and my car was at 16. I mean, that was the 80s.
Yeah.
You know, I mean, that's what it was. And if you wanted those things, or if you wanted that, now obviously the car is a depreciating asset, but the home itself, I didn't do bad on that home. It was just the times, it's where it was at. So now when we're looking at a 6% rate or 6.25 or half, that type thing, people are so used to or seeing those threes, they think that it's a bad deal. But I think there's a little bit of a reset that needs to take place there too. But, before I forget about it, one of the things I want to say, it made me think about it when you were talking is, I think that people can start to look at a relationship with someone like yourself, or even mine being in real estate, as transactional, when it's really not. It's relational. And then when
Absolutely.
I know that we work together, and some of the individuals, when they're like, oh yeah, I spoke with Reid, and when they tell me what they come back with, and just from the conversation that you guys had, it's huge. The education process is huge. Or it's like, hey, listen, this is what I would recommend versus, buy the house. It's not transactional. It's not about Reid to write this deal next week as much as it's like, this will put you in the best position. And the same thing if you've got the right realtor.
And I think that a lot of people are scared to do that. I think that it is a big step, they believe, reaching out to a realtor or reaching out to a mortgage lender or establishing that relationship. But I wish that they would, because like you said, you have such a good skill of finding people that right home, and it might take a minute, but if you reach out to someone like you or someone like Reid, they have so much helpful information that could get them started, like the things you recommend to improve their credit, or talking about realistic expectations and where interest rates are going and what's on the available market. I think that is an important thing to remind people of, is that you don't have to wait until you're ready to write that closing cost check. You can reach out to you a year, 6 months, 3 months ahead of time and say, hey, I'm thinking about this. I'm getting ready. What are the things that I can do to put me in the best possible position? And it sounds like you guys have a lot of things that can be helpful to people that they may not necessarily know are available to them.
Well, and the nice thing too about working hand in hand with someone like Ken is we keep in touch with them throughout the years, almost as like a team, and it's not like you disappear. They'll call Ken and ask for recommendations on window company or whatever it is, and then they'll call me and say, is this junk mail? And I'll tell them to throw it away. We're there for the life. And then they sell the house in 3 years or whatever, and it happens all again.
Right.
I want to say people stay in their house for 7.5 years on average. So people move quite a bit, and if you stay in front of them.
And I feel like we're also in a move where a lot of us are moving our parents into a smaller house, moving out of their childhood home. And it's great to establish a relationship with a lender or an agent that you're comfortable with and familiar with, so that they can help you through that transition.
I think that's one of the areas that I see some of the most activity, is those individuals that are downsizing, because they've either got a great amount of equity in their home or they own it. And so that's really not a factor, because they're stepping down, and usually it's just it's a transaction, as opposed to what does this long-term mortgage looks like, as opposed to it's a smaller number and the interest rate's not as,
Yeah. Well, one thing I've heard a lot of pushback on is home prices, and people worried about home prices moving and going down, where I feel like, but the Midwest is, what do I have here? The Midwest, 5 to 14% in the Midwest home prices over the next 2 years is what they're expected to increase.
It's a great investment.
Yeah.
I mean, it's
not getting cheaper.
Right.
It really is. Building
It's not
materials
getting
are only
cheaper.
getting more expensive.
So to me, it's like when you come in and you look at a home, I know a lot of times I'll have home buyers, shoppers, clients with me, and we're out looking, they're like, well, what do you think? What do you think? First of all, it's not about me, it's about you.
Yeah. What do you like?
I like it. But it was funny, I had a story the other day. I was with this couple, and the wife liked it and I liked it, but no one else did. And I'm like, that didn't swing the decision.
Didn't make it happen.
But what I'm saying is that when you step into a home, if it's not a new construction, that type of thing, make sure that the big ticket items have been taken care of recently, that type of thing, so you're not looking at a 25-year-old
Roof replacement.
Right, exactly, those kind of things, and do the best you can to help set yourself up for success. But again, I think that's one of the things that I think is just supporting what we've been talking about, is the relationship and helping give people direction, because a lot of people haven't been through it. Like you said, there's a lot of first-time home buyers, and I get a lot of questions from them where they're just really like, I don't know. So they're really looking for guidance, and maybe
Absolutely.
Maybe the internet isn't always giving them the right direction, kind of a deal.
A lot of first-time home buyers are on Zillow, going through, scrolling, and they say, oh, I really like this house, I want to buy it. And they don't know the first thing, if you can afford it. They don't know what the payment is. They don't know
property
anything.
taxes, all of these things that they may not think about initially.
But the house is cool. The house looks awesome. I want to go see it. So
it always looks better in pictures.
Yeah, it does.
But the thing that I noticed too is that people don't necessarily impulse purchase a home, but they impulse look at them. Yeah. So you can get a lot of calls and, oh, let's go look at this. Let's look at, it's kind of like a window shopping, and you can keep, decision making is emotional and logical or whatever. And there's a lot of, getting a first home or moving or something like that's exciting. So
how many houses do you think you have to show someone until they find the one?
God, it's kind of interesting. I'm going to say for myself right now, on average, it's probably 5 to 6.
Really? My last 2 houses we had set multiple ones to look at, and I picked it out from the listing photos and said, this is going to be it. And then we landed on both of them.
Knew right away?
Yeah, I must have been an easy client. But I had no idea about the process or what we had to go through to do it, or how to work with a mortgage lender.
Yeah.
Things like that. So that really opens your eyes to a lot.
Yeah.
And we had spoken about earlier, what is, from both of you, I guess, initially, what is the number one thing you want people to know who are considering buying a home right now, whether they're a first-time home buyer, they're downsizing? What do you think is the number one piece of advice that you would give someone considering that?
Number one piece of advice. Well, I'd say owning a home is not easy by any means, or is it cheap? Number one piece of advice, I would say, probably comes in preparation early, whether it's getting your bills right, whether it's you're working full-time hours and you have your job going. Obviously, there's always unforeseen things that happen and emergencies that you can't control. But controlling what you can control, whether it's your credit cards, your bills, your loans, whatever you need, kind of puts you in the best position. That's really most times or not, if I can't approve you, it's because either you have too much debt or you want a house that's way too much than what you can afford. So.
Or what if, this might be a unique situation, but what if they don't have enough credit and they're looking to build credit? They may not have enough credit history.
Yes, so then you can look at adding a cosigner on, whether it's a parent. Sometimes I've put parents on there just to take them off within a year, so they're back and everything's good. Sometimes you just open up a little Wells Fargo credit card, tell them to go put their gas on it once a week and pay it off and start that for a month. That is another thing you see with a lot of these young kids coming in. They just don't have credit, or they never had student loans.
We were talking about this. We just didn't. It wasn't part of our education. Nobody told us, here's how you build credit. Here's how you make a budget to afford, because they may see that, hey, my rent is now more than what a mortgage payment would be, but they're not thinking about all these other things, and they may not have enough credit. Like, I thought I was being a great kid, responsible, paying off all my cars, paying off all my loans right away, and then they're like, you don't have enough credit.
Yeah, right. Who are you?
We have to build that. So it's important you can't go one way or the other.
Well, then like the other way you were saying, my dad was in college and he used to tell me that he would just get credit card after credit card, and they'd tell him to open it up, and he'd like just open up every credit card because he didn't know better. And he was a foolish kid. And
Yeah, absolutely.
he's like, oh, I shouldn't do this.
I feel like every store's got their own credit card nowadays. So
I think for me, I'd like to understand and find out, like, what's their motivation. Like, what has you looking at this time? Some people are getting married. Some people have already owned a home. They want a larger home. Some people are down. Well, what's the motivation? I think the other thing that's important for me is location, because sometimes that can be. I helped one couple find a home. Great experience, great people. But I want to tell you what, I went over this whole state.
Yeah.
But anyway, so I'm just saying, motivation, location, and then, kind of tying it into a time frame. Like, when are you looking? What type of, type of time frame you're looking for? So I think those are a couple, 3 important things I look for, and then understanding a little bit more about, then how they're positioned to step into that home, kind of a deal. And then that's where someone like Reid comes in and helps with the financial aspect of it.
Definitely a team aspect. Kind of back and forth and seeing.
That's great. I feel like it also may give people, they have a whole team of support system as well. So because all of these topics you guys are addressing are things that, when I was a first-time homebuyer, I had no idea what I was doing. I didn't know any of those options were available. You've got all these different kinds of loans. What are some, so we've got a lot of federal options you talked about. Are there any Nebraska state options that people can look at, or programs
Yes.
or sources of information?
Yes, and Ken kind of touched on that earlier. It was the NIFA program, Nebraska Investment Finance Authority. And they collect money upfront, pre-tax, so they can offer interest rates well lower than any major bank can right now.
Oh, wow.
It is a state bond loan, so you have to qualify for it. There's income limits. You can get down payment assistance through that. They have the lowest interest rates, like low fives right now, that are the best. I've done it for a couple of my borrowers, and
Wow.
makes it really affordable for them. And that's, like I said, you have to qualify for being into that, and that's something we look at, and you have to be an approved lender. But they make it real easy for people to get in there and get help. So that's another thing that I promote a lot of people to go look into, whether it's not right for you or anything, but
Yeah, but it gives them
just
another
look at it.
option to evaluate.
So Reid, we're pressing up against time here, but I want to ask you something. Is there something that you can think of that you thought that we might ask, or that we didn't, or something that you'd like to communicate or relay yourself just about, loans, preparing for loans?
Question you see the most often.
Right.
Yeah. Well, probably the biggest question everyone wants to ask is about interest rates and what interest rates do. And I like to reiterate to people not to get too held up on interest rates. Don't let it scare you away. You're in a fixed loan, but your interest rate is never permanent. It keeps you at that one spot, but we can't always adjust. There's always different things you can do to make it more affordable. So
Fantastic.
people get so worried about it, and it's just,
Yeah, because they hear 30 years and they see their rate and they're thinking,
But
you're not gonna have it
we've
for 30
experienced a lot of
years,
people
but-
that refinance after a year or two.
yeah.
So,
Oh yeah.
So how can, if people want to know more and they want to reach out to you and have questions, where can they reach you at? How can they contact you?
I have a website, www.regentfinancial.com, and I will have a link as well for kind of my personal website.
Okay.
And I'm sure I can provide that and
Absolutely.
get it in there. And then that's the best way to get a hold of me. And then just kind of from there, I like to kind of just talk with people and get an idea of what they like and what they want and what they need. So
That's great personalized service. I love that. I think people appreciate that. So, well, thanks so much, Reid. We enjoyed having you on. I did not think that I could learn so much and talk about mortgage lending for 30 minutes, and I still have
get you
a lot of
moved. We'll get you
questions,
moved.
happy you didn't fall asleep. So
So watch us through the credits, and Regent Financial information and Reid's contact information will be in the credits. Thanks so much.
Thanks so
See you
much.
next time.